Hey everybody, it's Phil Hodgen. Welcome to the Hodgen Law PC International Tax Lunch. We do this every month on the second Friday of the month, noon Pacific time. So you can listen online through CalCPA, just like you're doing right now. We post the show to YouTube later, and you can watch it there later if you want to. Today we're happy to have a couple guests in person here. Tim, who's from London, he didn't come all the way from London just for this. He's here on holidays. And Henry, who is a CPA local who's been here other times. So if you want to show up second Friday of the month, we'll even buy you a sandwich. Come on by, just let us know. Shoot us an email. Anyway, this month's topic is the elegant and lovely Form 5471 and the attribution rules that apply to it. When a U.S. person owns shares in a foreign corporation or has some other relationship to it, hint, officer director, there may be a filing requirement for Form 5471. And today, Deborah Rudd is going to talk about what those filing requirements are, what are the thresholds you have to jump over in order to be required to do this thing. And then she's also going to talk about the attribution rules. When are you treated as being the owner of shares that somebody else really owns, and what's the implication of that? Anyway, Deborah Rudd is a CPA. She's a member of our firm, and you can find out more about her on our website, hodgen.com, including you can gaze at all of the lovely new pictures of us that were taken just about 10 days ago. Anyway, that's it, and let's go for it.
All right, let's get started. So today talking about Form 5471 and attribution rules. Just to set everybody's expectations going into this, we are not really going to cover how to prepare Form 5471. We're not going to talk about the financial information that needs to be reported there. We're not going to talk about the details of the stock ownership, Subpart F income, E&P, all these things we're not going to talk about. This is intended to be more of a basic course talking about who has to file the Form 5471, the basic idea of how much and what type of information they have to report, and how the attribution rules can modify or expand the reporting requirements to additional people who wouldn't ordinarily have to file if you read the rules just as they're written. So we have a number of topics. We're going to do a little intro section to Form 5471. We'll look at each of the categories for this form, and I'll explain what that means in a couple minutes. We'll look at who has to file under each category and what the requirements are for that category, and explain some of the terms associated with them. Then we'll go and look at the attribution rules. We'll do some examples of how these work. These are going to be primarily focused on the individual's side of things, not going too far into corporate structures or anything like that, because primarily we work with individuals, and yes, some of them do have corporate structures, but we're certainly not dealing with, some of the larger multinational type things that a lot of people tend to cover in these types of presentations. Talk a little bit about penalties, and then lastly, of course, we have to talk about the new tax laws and how some of the rules that we're discussing today have actually been modified. I'll point out some of the things that are a little different now than they used to be, and what that means for us moving forward. So what is Form 5471 for? And that's a good question. There's actually a variety of things you might need to report on it. Very common to be filling out parts of it, but not other parts. But essentially it covers a variety of filing requirements found in Internal Revenue Code sections 6038 and 6046 and the Treasury regulations. And it's to report things with respect to U.S. owners of foreign corporations. The form is organized by category of filer. A category is just a designation that is used by the IRS to say if you meet these certain requirements, then you have to file under this category. And if you have to file under a certain category, there are specific pieces of information that you need to file. So if you file under Category 3, for example, You have to fill out an income statement and a balance sheet, among other things, whereas if you file under Category 5, you don't need to fill out the income statement and the balance sheet. So the form instructions, Form 5471 instructions, actually have a very helpful little table that I haven't reproduced here, but you can always go look at that. And that table gives you a list down the left-hand side of the different sections of the form, and then across the top it's got columns for each category, and it shows you a matrix of what requirements correspond to what category. And there's, of course, a bunch of overlap. Oh, and one other thing. Among the categories, we can kind of group these into two, categories. One is Category 2 and 3 filers. These people report changes in stock ownership, so these are event-based reporting requirements. Category 4 and 5 are more for reporting information once you have certain ownership levels of stock. So those are more of an annual, ongoing requirement because you own a certain amount of the stock, so every year you have to report certain information about the company because of that ownership level. So there are 5 categories of filer, but really there are only 4 because one of them has been repealed. And each category, as I said, has its own requirements for who has to file, requirements for what must be reported. There are differences among the attribution rules that you apply to see who needs to file each category. Certain attribution rules apply for certain categories, and certain other attribution rules apply for other categories. It's really quite complicated, but we'll try and cover that as best I can today. And then also there are different penalties if you fail to report information or fail to file under different categories. Note that this form is for foreign corporations only. That means that it was organized outside the U.S., so it's foreign, and that means also that it's a corporation under U.S. tax law. Corporation under U.S. tax law means that it doesn't always follow the designation under the local law, so you could have something that's something other than a corporation under local law, but it is a corporation for U.S. tax law. So you have to look at the regulations there. If it's on the list of per se corporations under the regulations section there that I quoted, then it will be a corporation for U.S. tax law. Or it's an eligible entity, and it either defaults to corporation or it elects to be taxed as a corporation. So one of those 3 ways it is a foreign corporation. And if so, then you might need to report it on the 5471. Attribution rules. What are these really? Basically, there are things in the code and regulations that exist to say you have to pretend that you own stock that's owned by someone else. And you report it as if you own it. And so the people who get caught in these attribution rules, maybe they do own some of the stock of the company, maybe they own none of it, but they might have to file Form 5471 along with their normal tax returns as a result of these rules. So as you can imagine, a lot of people who fall under these rules probably never even suspect that they do. How and when to file. This one is actually pretty simple. You just attach it to your income tax return and file it by the due date, including extensions for that tax return. Let's move on and start talking about the different categories of the Form 5471. So Category 1, I mentioned that one of these was repealed. That's Category 1. Category 2, and we'll go into all of these in more detail in a minute. This is just a summary page here on slide 10. Category 2 is when a U.S. officer or director has to report that any other U.S. person acquires 10% or more of a foreign corporation stock. Category 3, to vastly oversimplify, a U.S. person acquires 10% or more. There's a lot more that goes into that one. We'll talk about that in a second. Category 4 is when a U.S. person controls a foreign corporation, and Category 5 is for what's called U.S. shareholders of a CFC, and we'll talk about what both of those terms mean. U.S. shareholders is a specific term. It doesn't just mean a U.S. person who is a shareholder. Let's start with Category 1. So this one hasn't existed for a while. This was in a former code section, 6035, and it was repealed for years after 2004. So most of us sitting here today will probably never need to worry about this one. So I'm not going to spend any time on that. Category 2. This one you will need to worry about probably. Now this one is for a U.S. citizen or resident who's an officer or director of a foreign corporation in which a U.S. person acquires stock which meets the 10% stock ownership requirement or an additional 10% of the stock of the corporation. So what do we mean when we say stock ownership requirement? I think that's important to look at because this term is kind of thrown around throughout the Form 5471 instructions. And this means 10% or more of the total value of the corporation stock or 10% or more of the total combined voting power of all the classes of stock with voting rights. So we can just boil this down to 10% or more of the value or voting power of the corporation. So going back one slide to slide 14, stock which meets the 10% stock ownership requirement. So let's say you have someone who has 5% of the stock, they acquire additional 5%. That means they have then met the stock ownership requirement. So whoever U.S. person is an officer or a director would need to report that U.S. person acquiring that 5% because they acquired enough stock to meet the 10% ownership requirement. Or if someone acquires a block of 10% or more of the stock at any time and they're a U.S. person, then that U.S. citizen or resident officer or director would have to report that acquisition as well. So if you haven't picked up by now, I think of this one as the tattletale category. This is where a U.S. officer or director has to report stock acquisitions by other U.S. persons. And often that officer or director is reporting you under Category 3. Typically that means you would need to report yourself under that person's reporting you under Category 2. That means you would need to report yourself and your stock acquisitions under Category 3. So what they're telling the IRS really is, hey, this person acquired stock in the company that I work for, so you should be looking at their tax return to see if they're filing a 5471. Under Category 2, there's actually not a whole lot of information that needs to be reported. You fill out your name and address and the company's name and address and some other page 1 information. Schedule G, list of questions. Not going to go into that today, really. And Schedule O, Part 1, this is to be completed by U.S. officers and directors, and this is where they give the information to the IRS about the other person who acquired the stock. Just a list here on page 18 of where you can find the laws that require this specific information to be reported. And then here on slide 19, this is actually a snippet of the section of Schedule O that has to be completed by a U.S. officer or director when they need to file under Category 2. And just included this because I think this one is a particularly evil part of the form, where you have to, in column A, you're reporting the name of the person who acquired stock in the company, then their address, social security number. This next column D is interesting, date of original 10% acquisition. So let's say this person you're reporting them in 2018 because they acquired an additional 10%, but 5 years ago they acquired 10%. So you have to say that 5 years ago they acquired that 10%, and you're giving the IRS information that could allow them to go back and look at that other person's tax returns from 5 years ago and see whether they filed this form or not. So it's really a lot of information that you have to provide here under this category, even though there's very little to fill out on the form. So moving on to category 3, as I said, this one's kind of a lot of times the companion to category 2, but this one has a much wider range of information that needs to be reported. And it has a wider net in terms of who needs to report under this category. So this slide 21 is a list of the different scenarios listed in the form instructions. These are the different people who would need to file under category 3. First, U.S. person who acquires stock in a foreign corporation, which causes him to meet the 10% stock ownership requirement. So anything that gets him up to or above 10%. If a person acquires an additional block of 10% of the corporation in a year. If a person is treated as a U.S. shareholder under Section 953C, and that's related to captive insurance companies. We're not really going to talk about those today, but it's on the list because it exists. A person who becomes a U.S. person while already meeting the 10% stock ownership requirement, or if a U.S. person disposes of sufficient stock to reduce their interest to less than the stock ownership requirement. And just as a reminder, stock ownership requirement, we covered that a few slides ago under category 2, means the same thing for category 3. It's 10% of the value or voting power of the corporation. So this last one, U.S. person disposes of sufficient stock to reduce interest to less than the stock ownership requirement. So it's any time that by value or voting power you were previously above 10% and you're now below 10%. There's also a somewhat hidden category 3 requirement. It's not listed on the section of category 3 in the instructions where all the other parts are, but it is there in the instructions, and this is if you own 10% or more of the stock and the corporation is reorganized. I guess you could say, it would kind of be captured in the other language, but this is specifically a requirement, just not quite as on the surface as the others. And again, this slide here is just to review what's meant by the word stock ownership requirement, just 10% or more of the value or voting power. Like I said, this one is the companion to category 2, or at least in my mind. If you have to report on category 3, it's possible you may have been reported by someone else on their category 2 saying, hey, this person acquired 10% of this foreign corporation that I'm an officer or director of, so go look at their Form 5471, and then you would be the person on your category 3 saying, hey, I acquired 10% or more of this foreign corporation. So don't know for sure that the IRS is looking at both sides of that equation when someone reports on category 2. I don't know if they go and check to see if that person reported on category 3, but they certainly could with the information that you're required to give. So just a little example here to show how you would make the determination if someone needs to file under category 3 in one of the scenarios. Let's say a U.S. person owns 30% of the stock of a foreign corporation and sells half of it, so he still has 15% left. That means he did not reduce his interest below the stock ownership requirement, so this person doesn't have a category 3 filing requirement, I don't think. And this is just illustrative of the types of decisions that you have to make in figuring out if someone even has to file this form, looking at their specific situation, reading the rules very carefully, and then figuring out yes, no, are they stuck filing this form? And my experience is a lot of times it turns on a very, very small detail or seemingly small detail whether someone might need to file or not. So category 3, as I said, this one has a lot of information that needs to be reported. This one is the whole first part of the form, really. Page 1 information, stock of the foreign corporation, U.S. shareholders of the foreign corporation, income statement, balance sheet, foreign taxes, the other information questionnaire, and then lastly, Schedule O, Part 2. This, I have not included a snippet of this part of Schedule O, but this is where you basically list your own information on this supplemental schedule to the 5471. Specific requirements, again, these are found in Section 6046 and regulations there, just listed in case you want to go take a look at what the laws actually say. All right, Category 4. So this is where we start to get into the requirements that are there on a more annual basis. Category 2 and Category 3 are really just event-based to report changes in stock. But Category 4, this one is to report a U.S. person would have to file Category 4 if they had control of a foreign corporation for an uninterrupted period of at least 30 days during the annual accounting period of the foreign corporation. So control means more than 50% of the value or voting power. And there's also a rule that I think is a little bit non-intuitive in terms of what control means, and it's best illustrated with an example. So let's say this person owns 51% of Corporation A, which owns 51% of Corporation B. Proportionally, he only owns 26.01% of Corporation B, but under the regulations, this person is considered to have control over both companies because the person has control of Corporation A, which has control of Corporation B. So this person would actually have to file Form 5471 under Category 4 for both of those corporations. And the regulation is cited there if you want to go take a look at that. For Category 4, this is definitely the most extensive reporting requirements under any category on the form. This is all the same stuff you would need to report under Category 3, plus a reconciliation of current E&P, reporting the shareholders' income from the foreign corporation. So this is the numbers that would need to flow from the 5471 to the 1040. Schedule J is accumulated earnings and profits, a little table that you fill out showing what's been previously taxed and what's not. And then Schedule M, listing related party transactions, things like loans, compensation, things like that. Luckily, no Schedule O under this one, because that's really just to report changes in stock. But as you can see, there's a lot of stuff required under Category 4. So this is quite a bit of information, and if you're preparing the form, it's actually kind of a lot of work. These requirements are in Code Section 6038 and Regulations 1.6038-1 and 2. Feel free to go take a look at those. And then Category 5. Let's see. So this one had a little bit of a change in the new tax law in terms of what Category 5 is. Right now, for 2017 and beyond, it's a U.S. shareholder who owns stock in a foreign corporation that is a CFC and who owned that stock on the last day of that year. Prior to 2017, you used to also have to own the stock for 30 days during the year, but that requirement is now gone. Now, let's take a look at what we mean by controlled foreign corporation. This is one of those terms that I think we need to define. This is when 50% or more of the value or voting power is owned by U.S. shareholders. And I put this sentence on different lines because we're going to look at what the words owned and U.S. shareholders means. Owned, of course, means directly or constructively, meaning apply the attribution rules, which we're going to cover in a little while. And U.S. shareholder, this is a U.S. person who owns 10% or more of the value or voting power of the corporation. And a controlled foreign corporation is when U.S. shareholders own more than 50% of the value or voting power of the corporation. So, back to the definition on slide 36. Controlled foreign corporation, 50% or more owned by U.S. shareholders. That term U.S. shareholders means this 10% or more U.S. person ownership. And U.S. person here means citizens and residents, domestic partnerships, corporations, trusts, and estates. And under the sections listed there, there are some modifications to the usual meaning for U.S. territories, but we don't need to go into that. Just know if you're looking at the territories that you should read the language more carefully. What to report under Category 5, again, the page 1 information, the Schedule G, other information questionnaire, current earnings and profits, reconciliation, shareholders' income from the foreign corporation, and accumulated earnings and profits. So this one, actually, surprisingly, in my mind, doesn't have the more extensive financial information reporting. Of course, that has to be done to calculate earnings and profits, so it has to be there in the background, but I've always thought it a little odd that this one doesn't require you to report all that information. All right, now let's start to take a look at the attribution rules. So the attribution rules essentially force the stock to be treated as owned by a person who's generally related in some way to the actual owner. And again, the rules are different for each category of filer. I mean, there's certainly some similarities, some overlap, but there's nuances between each category. And you also have to look at both family and entity attribution, meaning there's a set of rules that applies to individuals and then a set of rules that applies to entities when you're applying the attribution rules. So just to give a sense of how this could work, I have a diagram here on slide 42. Two brothers, Jake and John. Jake owns 100% of Corporation A, which is a Cayman corporation. And under attribution rules, depending on what category you're looking at, John could be also treated as the owner of 100% of the stock of this Cayman corporation for Form 5471 purposes, even though he doesn't own any of the stock. So John's whistling there. He seems happy. Everything's fine, but he doesn't know what he's really got to deal with. And then another one, John's having a bad day here. He's looking a little unhappy. And this is just a vastly oversimplified example of an entity attribution situation. He owns 100% of a Cayman corporation, which owns 20% of a Spanish corporation. Under some of the attribution rules, that 20% would be attributed back up to him, and he would have to report for the top-level corporation and the bottom-level corporation. And these are just meant to be general examples. I'm not giving specifics about specific categories just yet. Now, when you have the attribution rules, there's often what's called duplicative filing relief. And this means that if the only reason that you have to file is by attribution rules, and not because you actually otherwise have a filing requirement, then you may qualify for an exception to having to file. And the exceptions have a number of criteria to meet, so you would need to read the Form 5471 instructions very carefully. There's this whole section called Exceptions to Filing, and it gives you examples. If you're filing under this category and you only have to file for attribution, then you don't have to file if you meet this, and this criteria. Just for example. So if you do get caught in the attribution rules, be sure to check those instructions because you might have a way out of having to file. All right. So here we have a table listing the different categories of filers, the attribution rules that apply, and where you can find those rules. And this is for the individual's side of things. This is the family attribution side. So I'll go through the table and just explain kind of what we're looking at here and how you could use this. So category 2, attribution, is from spouse, siblings, ancestors, and descendants, so parents, grandparents, children, grandchildren. I've noted in a column, is it from siblings and from non-resident aliens, because those seems to be the two things that can toggle on and off here. Everything else pretty much remains the same throughout all the categories. So category 2, yes, there's sibling attribution, and yes, there's non-resident attribution. Category 3 is actually exactly the same in terms of how the attribution rules work for individuals, spouse, siblings, lineal ancestors and descendants, and yes, also from non-residents. Category 4, it's the same except there's no attribution from siblings. And then category 5 is just spouse and lineal ancestors and descendants, no siblings, and no attribution from non-residents. So let's go through some examples of how to apply these. So I'm going to do 1 or 2 for each category. So let's start with category 2. And let's say you have a family company that's owned by 3 siblings. So the first one is John. He owns 90%, and he's an officer and a director of the company. Jake, the brother, acquires 5% from an unrelated foreign person. Jill acquires 5% from an unrelated foreign person. She's the sister. So John, as the officer and director, he has to look at his category 2 filing requirements, and even though Jake and Jill each only acquired 5%, because the sibling attribution rules apply, Jake is considered to have acquired his 5% plus Jill's 5%, so he acquired 10%. Jill is considered to have acquired her 5% plus Jake's 5%, so she has acquired 10%. And so John, as the category 2 filer, has 2 siblings who have acquired 10%, and so he has to report both of them because they've both acquired enough stock to meet the 10% ownership requirement. So on the face of it, it looks like no one would need to file anything, and it turns out that John, in fact, needs to report both of his siblings to the IRS and tell the IRS that they should be reporting stuff as well. And then category 3, like I said, often category 3 is the companion to category 2. And so this is the same example again, but a little bit different. So again, John owns 90%, and he's the officer and director. Jake acquires 5% from an unrelated foreign person. Jill acquires 5% from an unrelated foreign person. And in this one, because we're looking at stock acquisitions, and we're not looking at only the officer director has to file, we're looking at anyone who's deemed to acquire stock has to file. John, Jake, and Jill all have to report Jake and Jill's acquisitions because each of those two is deemed to have an increase in 10% of the company's stock. And actually John as well would have to report a 10% increase because he's deemed to have acquired the stock that both of his siblings acquired. So all three are going to have to report under Category 3, each reporting a 10% increase in stock, even though only two of them each acquired only 5%. And then here's one that I've seen a bunch of times. This one is never a fun conversation because it's one that I think nobody ever expects to be the case. In this example, we have Karen. She's a U.S. citizen, and she is married to a non-resident alien. Let's say they live abroad in a foreign company somewhere, and they're going about their lives happily. Karen's filing her U.S. tax returns, and then her non-resident spouse forms a foreign corporation and owns 100% of its stock immediately after formation. Karen has to report her spouse's, I put acquisition, but really it's formation of the company under Category 3 because she has attributed all of the stock under the Category 3 attribution rules. There's no exception under Category 3 for being attributed stock by non-residents. So this is a situation where she has to fill out income statement, balance sheet, all kinds of financial information about this company that she doesn't own any of. And in some of the situations I've worked with, some of the people I've talked to, people are very unhappy about this requirement. Why do I have to get my spouse's company financials and report them to the IRS when we're, living in a country in South America? Doesn't make sense. But this one is surprisingly common. Okay, Category 4. This is another pretty common one that we see all the time. So in this one, we have Dylan. He's a U.S. citizen. He owns 24% of a Thai corporation. His spouse, a non-resident alien, owns 76%. Now for Category 4, there's no exceptions to the rule that applies attribution from non-residents. So Dylan here is deemed to own 100% of the stock for Category 4 purposes, and he has to file Form 5471. And then Category 5, we have Matthew, who's a U.S. citizen, and his father is a non-resident alien, owns 100% of the stock of a Hong Kong corporation. Now for Category 5, an exception applies so that stock is not attributed from non-resident aliens, and note that I said that's for individuals only. When you're looking at entities, the attribution rules do not work the same way, but we're in the world of individuals here, and so Matthew is not deemed to own his father's stock for Category 5 purposes because you don't get the attribution from non-residents, but he is for Category 4. So if we were looking at Category 4, he would need to file that. So moral of the story here, for each person you're looking at, for each category, because the attribution rules worked differently for each category, not differently for every category, 2 and 3 for individuals are the same, but in general you need to look at each category, the attribution rules that apply to each category, and make the determination separately for each category whether a person is subject to the attribution rules and has to file under them. And then once you decide if they have a filing requirement under that category, you can look at the form instructions and say, okay, is there any relief under the duplicative filing requirements? Can I somehow get out of this because the only reason I have to file is through attribution rules? And if you're in a situation where you have to file under multiple categories because of attribution rules, you may or may not be able to find a way out of it. And honestly, I think there are some gray areas in terms of how do I file the form exactly, what do I fill out if it turns out I do need to file it, and what categories do I fill in. In some of these attribution situations, it gets a little complicated and a little bit murky. I also have a table here to discuss the differences in entity attribution, and these are much more complicated than for individuals, and I did not devote separate slide examples to these really, but I did want to just provide the basic information of where the rules are found at least. So we'll go through this one as well. Category 2, at the entity level, attribution is going to be a little uncommon because usually when you're talking about officers and directors, you're talking about human beings. Category 3, and this one's a little bit vague actually in terms of the attribution rules for entities, but essentially from direct or indirect owners. Category 4 and Category 5, these are where a lot of the more specific attribution rules are. And this one's interesting because it can be applied in both directions, both up and down a structure. So that's why it has the words proportional to and from. And it's to and from partnerships, trusts, estates, and 10% or more owned corporations. And those words probably don't mean a lot, but we do have an example a little bit later that'll illustrate this a little bit better. Main idea, most important part, is where you get these rules, because every single time you have to apply these rules, you're going to have to look at the code. You're going to have to look at the rules as they're written and see exactly how they apply to the situation that you're looking at. There's unfortunately no way around that, I don't think. So step number 1, under the source column, let's say you're looking at category 4, you're going to want to go to section 6038, look at paragraph E2, and that's going to tell you to go over to section 318 and apply the rules from there. But then in the modification column, section 6038E2 tells you, go look at section 318, except in this paragraph apply this change, in this paragraph apply this change. So you look at the first code section, which basically tells you, here's the rules for this category, here's the code section that gives the general attribution rules, and then here are the modifications that apply specifically to this category. And then the same thing happens for category 5, except there you start at section 958A and B, and that tells you to go look at section 318, and then also provides some modifications to the section 318 rules. So I don't want to spend too much more time on the entity attribution, though we will come back to it in a minute. But for now, moving on to penalties, because this is a really big part of the equation here. If you have to file Form 5471 and you don't, even if you have to file it only because of attribution rules, there are statutory penalties that apply, and a number of them, and they're pretty high. If you have to file under categories 2 and 3 and you don't, the penalties come from Code Section 6046, and there's a $10,000 penalty per failure to furnish required information. And if you look at those words, furnish required information, that doesn't mean failure to file the form. That could mean something much smaller. Maybe you do file the form, and you left off enough information that they still want to assess a $10,000 penalty. Not that I've seen that happen, but certainly seems entirely possible, and I can't say that it hasn't happened, I just haven't seen it. There's also, let's say you get a letter in the mail assessing a $10,000 penalty. You also get another $10,000 penalty per 30-day period after 90 days from the date the secretary mails the notice of failure, and those can add up for 5 more months to another $50,000. So you could end up with $60,000 just for failing to file under categories 2 or 3. Categories 4 and 5, these are required under Section 6038. I believe the penalties come from section 6679. Forgot to put that on the slide, but if anyone wants to look at that, just email me after. This one, again, has a $10,000 penalty per failure to furnish required information. And again, another $10,000 per 30-day period after 90 days from the date the Secretary mails a notice of failure, not to exceed $50,000. So you could get a total of $60,000 under categories 4 and 5. You also could get a 10% reduction of foreign taxes available for credit with an additional 5% reduction for each 3-month period after the first 90 days. So if you have to file under multiple categories, and those include both categories 2 and 3 and possibly 4 and 5, you could end up in a situation where there are multiple very large penalties being assessed. Personally, haven't seen multiple penalties assessed, but it certainly seems entirely possible. If anyone's heard of this happening or had it happen to them, let me know. I'm kind of curious. Now, the way the penalty assessment works, I believe for corporate filers, if you file a late 5471, there's going to be an automatic penalty assessment, at least last I heard. And then for individuals, as far as I know, this is currently not automatic. They would have to actually look at your return and actually look at your 5471. And if you do file a 5471 late, if you qualify for penalty relief due to reasonable cause, you can make that request, and if the IRS agrees with you, they'll waive the penalties. And you can do this either at the time of filing by just attaching a letter to the 5471, or you can wait, see if you get a penalty assessment, and send in a reasonable cause request in response to the penalty assessment. And I believe if the IRS wants to assess a penalty, they disagree with your reasonable cause, you have an opportunity to appeal that, so you can try your luck on appeals and see how that goes. Now lastly, before we get to questions, and there are a lot of them, so we're not going to be able to get to all of them at all, I'm going to spend just a couple minutes on the new tax laws because there were some substantial changes. Actually, to be more accurate, there were many substantial changes to the laws as they relate to foreign corporations. And so here I'm just including very few of them that kind of relate to the stuff I'm talking about here today. This is not an exhaustive list. I'm not responsible for you knowing all the new tax laws. Go look them up. Okay. So the first is the expansion of the definition of a U.S. shareholder. Under the old law, this was only U.S. persons who had 10% or more of the voting stock. With the new law, it's 10% or more of the voting stock, or 10% or more of the value. So they brought the value into the equation. It's now 10% or more of vote or value. They also eliminated the 30-day holding period for Subpart F inclusions. I've heard a lot of practitioners out there seem a little unhappy about this one. Old law, U.S. shareholders had to report Subpart F income of the CFC if they held the stock for uninterrupted period of 30 days during the tax year and on the last day of the year. Now it's just if they hold stock on the last day of the tax year, 30-day holding period requirement is gone. CFC attribution rules modified. This one is perhaps the one that's making people the angriest. CFC ownership is not attributed from foreign to U.S. person under Section 318A3 under the old law, and in the new tax law, this was repealed, so attribution of foreign stock owned by foreign parent to U.S. subsidiary is now possible. When I look at these words, they're honestly a little bit meaningless to me, so this is how I think of it, this diagram here on slide 61. Let's say you have Corporation A, it's a Cayman corporation, and it owns 100% of a U.S. corporation, and it owns 100% of a Swedish corporation. That U.S. corporation is attributed the stock that its parent corporation owns. So Corporation B, the U.S. corporation, even though it has pretty much nothing to do with Corporation C, for 5471 CFC Category 5 purposes, attribution works here to attribute 100% of the stock of a Swedish corporation to this U.S. corporation, even though they just happen to be owned by the same foreign parent. So this one, so far in every presentation I've seen this year, people have been pretty upset about this one, and I can see why. This one, not particularly related to what I'm talking about today, but it's kind of huge, so I'm just mentioning it. There's now a deemed repatriation of non-previously taxed E&P as of the end of 2017, so if you're filling out a 5471 this year, check to see if that applies to you, because that's pretty major. And note that this one is not reported on the Form 5471. There's a special transition tax statement for that. Guilty, this is the new tax law that started on January 1st, 2018 to very, very vastly oversimplify. It's effectively kind of a pass-through treatment for foreign corporation income. As far as I know, we're going to continue on Form 5471 until we're told otherwise. There's also a new dividend received deduction for 10% owned foreign corporations. And this now applies to sale of stock in a foreign subsidiary. Kind of glossing over these last two slides. I think they're interesting, but we're kind of running out of time and we have a lot of questions, so I want to make sure that I get time to look at those in just a second here. So, slide 66 here just says, and more. There's many other changes too, and that's just as a reminder that there is lots and lots of other stuff to look at in terms of changes to the reporting required for foreign corporations under these new laws. With that, I'm going to try and answer a few of the questions. I am not going to get to all of these. There are a lot, so please feel free to email me afterwards. If I don't get to your question or if you want to discuss it further, I'd be happy to talk. Please note this presentation is not for legal or tax advice. Don't use it to avoid penalties. Hire someone to help you if you need help. Don't rely on this. And here's my contact information if you want to talk more about anything or if I didn't get to your question. Okay. Let's see. Wow, a lot of questions. Okay, this is great. Will the recording be available online? Yes, we'll be putting it up on our website soon. Probably check back in about the next week or so under the resources section. It should be there. How successful is reasonable cause for penalty relief? This really depends on how many factors you have that contribute towards your reasonable cause argument. Somewhere in the Internal Revenue Manual, and you can Google this, is a description of what qualifies as reasonable cause, and you can look through each of the criteria and the examples that they give, match up the facts of your own situation and see how closely you match to that, and when you make your case, cite those specific things that they're talking about. I talked to a IRS appeals officer who specifically worked on reasonable cause determinations, and I asked him, when people take this to appeals, how frequently do you end up assessing the penalty versus not assessing the penalty, and he said it was about 50-50. So in my mind, if you're in a situation where your option is to go to appeals, probably can't hurt to do it. You have a 50-50 chance. Let's see. Someone asked, isn't there an exception to filing under family attribution if the U.S. person has no interest in the family corporation? The answer to this is yes, sometimes. Look at the requirements carefully. Under the instructions, there's an exceptions section, several paragraphs long, has a lot of information, and it gives very specific criteria that you have to meet in order to qualify for the exception. and some of them are and statements. In other words, you have to meet criteria 1 and criteria 2 and criteria 3 in order to meet the exception to filing. And if you miss one of those criteria, that means you don't meet the exception. So there are exceptions. It's just I wouldn't say it as a blanket statement that if you only have to file because of attribution and you have no interest that you don't have to file. Look really carefully at those criteria and make sure for your specific situation. Sorry, just reading through the questions, a lot of them here. Really quick one, are non-residents required to file Form 5471? Nope, this is for U.S. persons. So non-residents, as long as they don't meet the substantial presence test or become a U.S. person, should not have to file it. Oh, here's an interesting one. I've often wondered about this one. This one says, am I correct if an officer did not acquire any stock during a year, he is not a Category 2 filer? This one, I believe it's if you're an officer and any other U.S. person acquires stock during the year, that you are a Category 2 filer and that you have to report that other person. My reading of this, and I believe this is what the instructions and the regulations and the code say, I believe that you're reporting other people under Category 2. Now, if you're an officer director and you acquire an additional 10% of the stock, I think you also have to report yourself under Category 2. So I think there's an exception if you're reporting yourself under Category 2 that you don't actually have to. Requirement exists and then there's an exception. Oh, okay, here's a good one. Is it true if a foreign corporation does not have any assets that a shareholder does not have Form 5471 requirement even if he fits one of the categories of filer? This is part of the truth. There is an exception for dormant corporations. One of those is a threshold where if you have under a certain amount of assets, that you could qualify for the exception, but there's a number of criteria that you have to meet to meet the dormant corporation filing requirements. And this is actually, there's a citation in the Form 5471 instructions. Don't remember the exact revenue procedure off the top of my head, but it is mentioned in the form instructions and you can find it from there. And all the criteria are also listed in the instructions, but one of the things is not just that it didn't have much assets, but that it had very little or no income. And then also I think there might be some requirements about, there's some other ones too, it's a list of things, but okay, we are actually at 1 o'clock now, so I think I'm out of time. I'm going to put Phil on for the opposite of the introduction, the outro. And if there's any questions that I didn't answer, there's a lot, please feel free to email me.
Okay, thanks, Deborah. And now, at the end of this hour, you know that Form 5471 is the spawn of Satan, or at least Satan's cousin. Thanks for joining us. Again, email Deborah if you have questions. We'll be happy to follow up. And thank you all for participating. Next month, presentation is on September 14, 2018. And William Shiraga, CPA in our firm, will be presenting on dual status returns. This is individual tax returns for when people flip from resident to non-resident or vice versa. There's no such thing as a short fiscal year for a human. And so this is the manky, kludgely bomb of a methodology that the IRS uses for when you change residency status. I'm not bitter about it, but there it is. So anyway, William is going to fill you in. If you're not already on our mailing list, go to hodgen.com/newsletters and sign up for one or more of them. And if you're already on the mailing list, tell your friends, and we'll see you next month. Back to you, Robert.
Thank you, Phil. And I'd like to thank Phil and Deborah Rudd and everyone attending online. Certificates of completion will be available for download within 3 business days. Thank you all for joining, and have a great day.